Hi everybody, Krista Mashore, Homes by Krista. Today I have Tom Pinocci with me. He is with Security One Lending. This is a very unique segment. Remember, this is an educational based type of webinar for you to see. And we are talking about reverse mortgages today. So the reason I have Tom here today is because there are a lot of misconceptions about reverse mortgages. But I want to start, Tom, by introducing you and saying hello to everyone.
Hello everybody, good to be here. Krista, thanks for having me.
You're so welcome, you're so welcome. So tell us, what is a reverse mortgage?
Reverse mortgages are designed for seniors 62 years of age or older. But if there's a married couple, one could be 62 and older, and another one could be under 62, and the two of them could still get a reverse mortgage.
Okay.
But it's designed for seniors to use some of their equity in their home. They can't use it all, they can only use some of it. It's based off their age, the appraised value of the home, plus the current expected interest rates determines how much they qualify for.
Okay, and the nice thing about reverse mortgage is that if an elderly person is struggling and they don't have a lot of money, they can use some equity in their home to actually be able to live more of a peaceful, more comfortable life.
Exactly.
Okay, yeah.
That was over the years, that's kind of the main reason for reverse mortgages, if a senior was struggling. But I've been in the business for 10 years, and over the 10 years I've been in the business, that whole shift, there's been a shift there. It's not necessarily for folks that are struggling.
Okay.
A lot of people are using a reverse mortgage to supplement their income, to pay off debt, but it's not necessarily from years ago where it was only designed for people that were struggling.
So it's very, very new, and I have to say, so I met Tom through a previous client. I actually interviewed 3 other reverse mortgage specialists and found out they were not specialists. So the reason I have him on here is he only does reverse mortgages, and you were so good with the clients, and I learned so much. So I really think it's important for people to get the word out. So what are some of the common myths about reverse mortgage?
Well, the number one myth around a reverse mortgage is that the title of the property goes to the lender, and that's not the case. The title still remains with the homeowner.
Okay.
If their home is in a trust, it still remains in the trust. But in the 10 years I've been doing this, I still hear that. People still think that is what's going to happen when you get a reverse mortgage, that the title's going to go to the lender. Not the case.
It's not the case.
Never been the case, actually.
Okay. So how does it work exactly? So how does a reverse mortgage work?
Yeah, once you qualify based on there's a formula. You qualify for a certain amount of money.
Okay.
And then you could use that equity. It's a loan. And
so it's equity. They're using equity.
Using equity in the home. It's not. It doesn't impact your income like your Social Security income. Some people think that that's the case. Doesn't impact Medicare. Does not impact your pension because it's a loan. It's not income. So you're basically using some of the equity in your home to use the money for whatever you choose to use it for.
To travel, just living more comfortably, doing a remodel, whatever it might be.
Yeah, the more common ones are you get folks that are using it to pay off debt, like an existing mortgage, to free up that cash flow.
Okay.
Maybe some credit card debt, whatever the case may be. Some people get it to supplement their retirement income because maybe their Social Security or pension is not enough. So the reverse mortgage can help supplement that. And what I'm seeing more and more now is some folks they may be free and clear on their property.
Okay.
They don't have a mortgage. And they're getting the reverse mortgage to set up a line of credit within the reverse mortgage and periodically tap into that line of credit whenever they need some money. And then what's cool about the line of credit, it has a credit line growth rate. And it's currently growing well over 5% right now.
Oh, great.
So that line of credit is available for them. So everybody's using it for a lot of different reasons now than when they first came out. These FHA reverse mortgage products came out in the late 80s. When I start working with someone about the possibility of a reverse mortgage, before we could order the appraisal or secure all the application paperwork, that senior has to go through an independent third-party counseling with a HUD-approved counselor. What the counselor does, you could do it over the phone or face-to-face, the counselor will make sure that the senior knows what a reverse mortgage is all about, make sure that people like me presented it properly,
okay.
And more importantly that the senior is not being taken advantage of.
Perfect.
I think it's the best step to the process. Once they're done with that, they get a HUD certificate, then I can go back and meet with them, spend some more time with them, answer any additional questions, then start the process with an application, and then order the appraisal.
So then we know what a reverse mortgage is, okay, and we know how it's used, okay. How do they actually go about getting the money or using the money?
Yeah, they could use the money in a couple different ways. They could take it out in either a lump sum, a partial lump sum. We could set it up where they could get monthly payments on a monthly basis for as long as they live in the home. No matter how long they live, they could live to 100, 110 and still get that money.
Okay.
Or they could leave it on a line of credit, or they could do a combination of any of those 3 options.
Okay, great. So then they're getting they're so cute. They're getting this, using the equity, right? And then they're not making payments on it.
Correct.
It's just money that they're able to use and tap into. And then when they sell die, or
Move.
okay, then at that point it's paid back.
Yeah, move, sell, or die, and let's just use the example of, say...
We don't want anyone to die, so let's just put that out there.
Yeah.
Hopefully move or sell.
Yeah, move or sell. But
die too.
But upon death, if that's the case, if it's a married couple, if one passes before the other, the reverse mortgage stays intact for the surviving spouse. That's good peace of mind.
That's great.
It would require the surviving spouse to permanently leave the home, whether upon death or moving into assisted living or what have you.
So think about this. I know people they have these weird conceptions about reverse mortgage. So if you have elderly parents and maybe they don't have life insurance, and one of the elderly parents gets ill and the home has equity in it, and there's a lot of equity. Many times the homes are paid off and they're worth $4, $5, $6, $7, $800,000. They can use that money and tap into that money to help them have a more enjoyable life if need be. So it kind of can set the concerns of the spouse that's passing and also of the family.
Exactly.
And I know that you will do counseling. So if there's any family members, a husband and wife, and also their children, Tom will come and actually counsel you and explain to you exactly how this works. And I have to tell you, I actually had some really negative thoughts about reverse mortgage because I had listened to the hype until working with you, and I didn't realize just how helpful it can be. Why sometimes it seems like the children are a little bit against this? Why would that be?
Yeah.
It seems like the children are more adverse than the actual parents.
Well, in the 10 years I've been doing this, I only recall one time when an adult child was part of the meeting and he had a problem with it.
Okay.
The other 4 siblings were on board with the dad, but he had a problem with it. But it turned out that the father still did the reverse mortgage for all the right reasons. Now, some of the heirs or the kids may think that, well, there's not going to be any equity left over for me when my parents pass away. And that could happen. We just don't know when we're going to pass away or permanently leave the home. But rest assured, for the children of the parents that have a reverse mortgage, it's an FHA insured loan. So say the house is only worth $300,000, but the debt happens to be $350,000.
Okay.
It's upside down by $50,000. It's considered a non-recourse loan. The home stands for the debt. FHA will make the lender whole with that $50,000 upside down. Other assets that the kids' parents have, investments,
all safe.
Personally, all safe. It's the home that stands for the debt. And what's really good about that is when I do reverse mortgages for seniors, they want to make sure they're not leaving any problems for their children.
Absolutely.
I say that up front to them, that you're not leaving any problems to your children if the real estate market happens to be in the tank when that loan is called due.
So the mortgage insurance takes care of any deficiency. Sure. So that's definitely not a worry. And okay, it just sounds very smart. Why everyone wouldn't do it?
Yeah, well, and I'll be the first to say, the 10 years I've been doing this, it's not, this loan is not for everyone. I get that, I know that, and I'll be the first to tell someone not to do a reverse mortgage
if it doesn't work for them.
Yeah, well, sometimes it may not work. They may not have enough equity for the.
So how much equity do they need to have again?
Roughly somewhere around, depending on the age, but somewhere the rule of thumb, they need to have somewhere up to about 40%, 45% of equity in the home.
Okay.
Probably more like 40%.
Now let's talk about something else. You can now do a purchase. So it's now before it used to just be refinances. Now actually and this is the 2 purchases that we did together, that we actually had seniors buying a property, brand new from scratch, selling their property and buying a property and then doing a reverse mortgage purchase.
That's right. So with the reverse mortgage for purchase, typically seniors, they either have to downsize or maybe they want to move closer to their children or grandchildren. So they want to buy a house. So they have 3 options to buy that house. They either pay cash for it, they have it, or go get a traditional loan that requires payments, or consider a reverse mortgage. So you don't have to throw all the cash down. Let the reverse mortgage finance 60 to 65% of that purchase. Keep some of your money in the bank from the house you sold before.
Gotcha.
And let the reverse mortgage be the financing tool. Then you come in with the difference as a down payment. And guess what? You have no mortgage payment. No mortgage.
So then here's what I make sure so I understand. So let's just say someone gets a reverse mortgage, they take out a loan for the reverse mortgage for $200,000, and then they end up passing away, and they don't use all of it. Do the siblings get that back?
Yeah, what they get back is really what the difference of what the equity is going to be. So say a senior qualifies for $200,000 from a reverse mortgage.
Okay, and they use
maybe $50,000.
Okay.
Or 100. Let's say $100,000. They use $100,000 and they pass away. Well, they didn't borrow the other 100 yet.
Oh, so it stays with the property.
It kind of stays with the property, basically, yeah. So if the house is worth $500, the kids sell the house for $500, but the parents only used 100 of the 200 that they qualified for. Only the 100 has to be paid back plus interest.
Okay, perfect.
So it's only
and there's interest no matter what, regardless. That'd be on a regular type of loan too.
It's like on a regular type of loan. The interest on a reverse mortgage is added to the loan to the loan balance. In fact, this loan, you could literally get into a reverse mortgage with zero out of pocket. You have to pay for the counseling fee. That's typically 125 to 150 bucks.
Okay.
But all the other fees can get wrapped into the loan.
Okay, great. Okay, gosh, I feel like we've just learned so much today. So Tom, thank you so much for coming.
Thanks for having me.
You know, I really appreciate it. To get in touch with Tom or reach out to him, please do so at any time. You can contact me. Here is Tom's contact information, so feel free to reach out to him. And again, remember, he will counsel you as an individual and also the family members as well.
Great.
Okay, thanks so much. Have a good day.